Okay, today we're going to talk about why you're probably buying the wrong insurance. Over 80% of Malaysians are paying for coverage that they don't fully understand, and the local agency system is designed to keep it that way. Here's what's actually going on and how to fix it. The 300 ringgit a month subscription trap. If you're a Malaysian working professional, you're likely paying 200 ringgit to 500 ringgit a month for insurance. Ask yourself what you're actually covered for, and to be honest, what you'll think that I have a medical insurance, pantai or KPJ bill will be covered. But the reality is that you are treating your biggest monthly financial commitment like a Netflix subscription. Pay it, forget it, assume it works. The ILP Mirage, your money grows while you are protected. ILP are the reason number one why Malaysians buy the wrong insurance. The pitch sounds perfect. Part goes to insurance, part goes to investment in 20 years, withdraw cash or pay off your premium. But in reality, it's often a lose-lose. Here's why. Where your 300 ringgit a month actually goes. In the first phase, from first to the 6 years, RM300 goes to the commission and admin, little is actually invested. Phase 2, year 7 to 15, the cost of insurance rises, investment hurts by high fund fees. And phase 3 itself, when you're age 55, cash value is drained, insurers demand that from 300 a month, maybe you need to top up all the way to 800 ringgit a month. So the promised investments become a ticking financial time bomb. At age 60, you could actually get a letter saying that your cash value is zero, you must pay more to keep your medical card active. A medical card pays the hospital, it doesn't pay you. So Malaysians are actually obsessed with medical card, and for a good reason, but medical card only covers the hospital bill. It doesn't cover your life while you recover. Take one scenario, if you so happen to get stage 3 cancer diagnosis, your 150,000 chemo bill is covered by your medical card, but you can't work for 2 years. Who pays for your 2,000 mortgage, your car loan, your kids' school fees? So this is where the difference comes in. For medical card, it's purely for hospitalization. It pays the hospital directly. It covers all the ward fees, your surgery, your medication, but it does not cover your living expenses. Take example for critical illness plan. It actually acts as a form of an income replacement. It pays you directly in cash. It covers all your rent, all your loan, your cost of living, such as your food, and also the school fees. So it replaces your income while you are recovering or unable to work for that period of time. It could take you up to 2 to 3 years or even 5 years or 10 years to recover from a critical illness. So right now, we are actually looking into the coverage gap most Malaysians ignore. So typically, we will have a lot of agents nowadays telling us, oh, you can actually get up to 1 million for your medical coverage for your hospital limit. But averagely, you may have even 0 to 50,000 only for your CI coverage, while we actually normally recommend that you get at least 10 times to your annual income. Most Malaysians have R1 million for their medical card, but only 50,000 in critical illness protection. The balance is completely wrong. Third mistake is the cultural fear of rugi is costing you. The logic is, if I don't get sick or I die, my 50 ringgit is gone every month lah. Rugi lah. So Malaysians willingly pay 8 times more for 1/5 of the actual protection just to get a small cashback promise in 20 years. But the reality check is insurance is an expense, not an investment. You don't buy car insurance hoping you crash your Myvi. You pay it hoping you never use it. Buy protection for protection. Do your investing separately. The numbers don't lie. Term insurance, maybe you pay 50 ringgit a month, you can get 500,000 coverage already. Pure protection, no savings element. If you compare it to a savings plan or an endowment plan, you are paying 400 ringgit a month, but only 100,000 coverage, which promises small cashback in 20 years. So typically, you are paying 8 times more for 1/5 of the coverage. That is the true rugi. Now, moving on, the fixed 10 to 10 rule. So simply Simply put it is the 3 simple steps to audit your insurance this weekend. No Asian pressure required. 10% budget rule. Total monthly premium should not exceed 10% of your net take-home pay. Earning 5,000 ringgit, maximum 500 a month for your insurance. 10 times income rule. Your life and critical illness coverage should equal 10 times of your annual income. Earning 60,000 a year, target at least 600,000 in protection. Unbundle your policies. If let's say your budget is tight, buy a standalone medical card and a standalone term life instead of a bundle ILP. You get a massive coverage to hit your coverage of 600,000, for example, for a fraction of the price. So here's your action plan for tonight. Open your insurance drawer where you keep all your policy. Check these things. What is your actual critical illness payout sum? Or even for your death or disability? How much are you paying for the policies? Don't let the fear of rugi stop you from building a real financial safety net. Share this with friends paying too much for their ILPs. If you have any questions or inquiry, feel free to reach out to me and I'll be glad to help you in your financial planning journey. I'll see you in the next video.